Dial 650 presents It's Your Money, an up-close and personal look at your finances. Here's your host, Fred Snyder.
Up in the morning and out to school.
Okay, we're back. Mind you, once again, we're live, interactive. You just listened to 1 hour of a replay featuring Dr. Vincent Millardo. On that show, we were talking about health and wealth. Today, we're talking solely about your wealth. And how do you make sure that your money lasts as long as you do? Because you're probably going to live longer than you anticipated. And it would be sad if you ran out of money before you died, because you could be alive for a good many years and broke. 100 people starting out equal today at the age of 25. By the time they end up at 65, 1 is rich, 4 are well-to-do, 5 are still working, 36 are dead, no more problems. The other 54, the remaining 54 people, over half, are dead broke, dependent on family and state. Those are the ugly statistics, ladies and gentlemen, listeners out there. And if you don't do something about that, if you don't become more proactive about how you deal with your money, and the key word is proactive, if you don't become more proactive, you're going to be broke. And they don't teach you how to do it in school, and they should. We do. We teach you what you need to know to make better financial decisions, to make better decisions, and to make them more effectively, so that you can know how to choose the best investments to put inside your overall financial plan, so that you do have a financial plan. Ask yourself this simple question: do I have a financial plan? Do I even know what it is? And if I don't have one, why don't I have one? Because we're offering a free, no obligation, written financial plan at absolutely no cost. All you have to do is call the show. In addition to that, you get a second opinion on your investment portfolio in writing, prepared by a CFA. Doesn't get any better than that, ladies and gentlemen. So you have a way to get a plan or a blueprint, which is going to take you from where you are right now to where you want to go financially. A bridge, if you want to call it that. So you're going to get that bridge, helps you define where you stand and where you want to go, and how to have the best investments inside that plan. Because a mutual fund or a bunch of stocks or whatever, a portfolio is not a financial plan. It's part of a financial plan, but the financial plan is the box, the structure that you put the financial products into. And my job is to make sure that you have the best financial products inside your plan. Let's talk to Maria from Vancouver. Maria, welcome to the program.
Thank you. Thank you for taking my call.
No problem.
I hope my situation doesn't happen to too many people, but I thought I'd call in because I want a couple of answers.
Mm-hmm.
I was married 20 years, divorced 18, never had a boyfriend, and then this summer I met a wonderful person. So I thought, 2 months ago I found out he's having an affair on the phone, and at the end of November he took off to Mexico, where she is. She's Mexican. I wanted to get a quick divorce, get it out of the way. My family does not even know this is happening because I lost my dad in October. It's bad enough as it is. I've been told I have to wait a year before I can get a divorce. And I've also been told, because it'll be past a year, he's entitled to 50% of my home. Is this true? Because he didn't put a penny. I paid for everything. He actually left me a huge bill.
How long were you married?
Oh, we got married in July this year.
Okay.
There's
a pretty good chance that what you say is true, but I'm not a lawyer. This requires a lawyer. This is a complicated situation. The law generally presumes that assets are owned jointly. But under the circumstances, there may be situations here where that wouldn't be the case. Maybe you probably weren't married long enough, just as one particular part of the issue, because the laws governing marital relationships are constantly in flux. They're constantly changing, subject to much interpretation. My advice to you, to give yourself some peace of mind, is to seek legal counsel.
All right.
And you can start, if you can probably Google that question and probably get some pretty good answers. If you have a
I'm
computer.
going to have to ask somebody to help me because I have to be honest. I'm not into the Google world. I can use a phone and I listen to the radio, but I'm not. I'm 60, so I am not into that stuff.
Well,
By choice.
you know, I have to be careful about this kind of advice that I give out on the air simply because there may be people that interpret what I say one way and they may even make decisions based on it, and you got to be very careful about that.
No, I totally understand. It's
That's
because I listen to you every Sunday that I thought, since he's not here, I'm going to make the call, find out anything.
Yeah, there's some legal people that are on this show from time to time. Murphy Batista.
Oh yes, I've heard his name.
They could probably help you there. Joe Murphy is a great guy, great lawyer. Angela Price Stevens is on there with him as well. Those are sources of information. You can actually get legal advice. There's a type of thing that you can enroll in. I'm not sure what you call it, but there's a kind of a club that you can enroll in where you can get legal advice. I think you pay $25 a year for
tons of money. This is what I'm trying to say. I've been through one divorce. I didn't think I was going to be into another one so quick.
No.
So, but that's life.
But I would say that if you want to come in and talk to me, I'd be happy to spend some time with you on this one. I'd be happy to help you anytime.
Well, thank you very much.
Really appreciate your call. You take care.
Thank you.
Bye for now.
Bye.
Okay, if you just joined us, ladies and gentlemen, and listeners out there, I'm certified financial planner Fred Snyder, also registered financial planner. That's a good example of what people go through, though. I see that kind of stuff all the time. I was listening to the show on the way out here, the prior show. We did it on Grey Cup Day the last time. And basically, people, I talk to probably 4, maybe 5 people every day. That's like a minimum of 20 profiles of people's finances that I see every week. And no two profiles are the same. They vary dramatically. And this issue of marital breakdown, that's one of the major risks that people face financially. Because the odds are 50-50. If you get married, you're going to get divorced. Okay? Now imagine being married for 10 years and losing half your assets. And having to start all over again. So basically, you have to define the risks. The risks inside of a financial plan, there's a tab in there called risk management. So what are the risks that you must manage? Well, some of them are death, disability, loss of job, divorce, personal injury, critical illness, disability. These are all the risks. You know, you just heard the story on the news. It really got a lot of press about the lady who had a baby in Hawaii, as an example, and her medical insurance, she had travel insurance, they won't pay the claim because they said she had a pre-existing condition. $950,000 apparently is what the bill is. People travel outside of the country all the time and they're not aware of the risk that they're faced. Oh, well, I have travel insurance. But what if you have a pre-existing condition? Just as an example, I listened to the Murphy Batista show a couple of weeks ago. That's what they were talking about. Okay? So you think you're covered and you're not. And you do everything you think is right, but you're not. And that's why you need a financial coach to help you make sure that you make the right decisions. And that's what I do. So I'm certified financial planner Fred Snyder, also a registered financial planner representing Scotia and Cloud. I differentiate myself from what other people do because I teach. I do workshops and courses and radio shows and write books and memos and all kinds of stuff to educate my clients because I feel passionate about the fact that in school they don't teach you this stuff, and they should, okay? Because it's vitally important. It's not about how much you make that counts. It's about how much you keep. So you go to school to learn how to earn money, but then they don't teach how to keep it, and you end up broke. Now, that's a silly game as far as I'm concerned. So if you're out there, you're listening to the show, area code 604-280-0650, long distance 877-280-0650. You can log on, www.CIL650.com, and you can call Frida. If you're shy or reluctant to talk on the air, you can reach Frida right now, area code 604-737-3512, long distance 800-661-1414. 1495. So once again, we're talking about your money, but the more important part of that is how to keep it. If you have any money, how are you going to make sure you hang on to it? If you earn money, how are you going to make sure that you keep some of what you earn? How are you going to make sure that what you have isn't eroded away by taxes and inflation? What if I die? What if I end up in a divorce? What happens if I'm traveling? Let's say you just go across the border to get gas, and you get in a car accident, you end up in a U.S. hospital. You could get a bill that would choke a horse. So you need to make sure that you're covered, and that's what I do. So once again, area code 604-0650. Long distance 877-280-0650. And Frida, for those who are shy or reluctant to talk on the air, or you may want to just make an appointment to see myself, area code 604-737-3512. If you're calling long distance, it's 1-800-661-1495. Remind you once again, our theme is your money and how to keep it. That's what we talk about. So everybody needs a written financial plan. Very few people that I talk to have one. So what I want to do right now is kind of look at a case study. So here's a case study. This is actually a person who came into my office and said, I'm 70 years of age. I want to retire right now. How long will my money last? So if we look at the parameters of that, he's 70, wants to retire at 70. He's got $100,000. That's his annualized income. He's got $20,000 in pension money coming in. He wants it adjusted at 3% for inflation. He wants to have an income of $100,000, and he's got $500,000 today. He's going to save $10,000 a month. Well, he won't have to do that because he's already retired. That's pre-retirement. 3% for inflation. He can get a 10% rate of return. 10%. If he retires today, how long will the money last? Sadly, it will last until he's 79. That's 10 years. Not quite. 79. That means the income stops at 79 too, because these blue bars across the bottom is the income. So he'll run out of money at 79. And he probably won't die until he's 85. So he's broke for 6 years. So what does he have to do to fix that? Becomes the issue. And everybody's in the same boat. So if I go back and I say, well, how can we fix it? Well, I'm not sure it's fixable, to tell you the truth. He's got $500,000. He can't turn that into more. He can cut down on the annual income. I can say he wants an income annually of $70,000. So I change the income to $70,000. And the income, then he wants 100% of that, so that calculates automatically. Inflation is adjusted at 1%, which is probably, it should be more. Let's see what those numbers look like. He won't run out of money, incidentally. The money goes on forever in this particular case. So that line there represents his capital. So at age 89, if he goes for 20 years, he'll have $547,000. He only started with $500,000. He'll increase his principal. But you see, what is your number? That's what the question is. What is your unique set of numbers, and how do you get them? Well, you come and see me. That's one way. Make a phone call. Call Frida. Decide to become proactive and say, I'm going to get my numbers crunched. You can phone me right now, and I can crunch your numbers if you want. But in the meantime, I'll talk to Alan from Vancouver. Alan, welcome to the program. Hi, Alan. You're on the air.
Yes. Hello, Fred. Let me just turn down my radio here.
No problem.
Thank you very much for taking my call.
Okay, no problem at all.
And what I would like to do two things. I'd like to ask a question, but I'd also like to give you some information. You mentioned to one of the previous caller, the woman who called up concerning her situation as far as divorce.
Sure.
And you mentioned that there was a program, legal program, where you could get free legal advice. You basically for a subscription where you join.
That's correct. It's like a legal.
That is called Legal Shield.
Yes.
And I suggested that there is a woman that I know very well who is extremely nice woman and very knowledgeable. Her name is Judy Ryman, and I gave this advice, gave this information also to the person, your technical person, that's behind the scenes there, Dwayne.
Okay.
And her phone number is 604-568. That's 568-3082.
Okay.
And she could definitely be of assistance to this woman, at least in terms of that program and what they offer. And it is a very reputable company as well. I'm quite familiar with it myself through my association with Judy. So that's on that note. That might be helpful. And I am basically, my question is, I am in a situation in my life where I am just become more or less debt free.
Yes.
Over the last year and a half, and
Congratulations.
What?
Congratulations.
Oh, thank you. I mean, I still don't fully understand it and embrace it, but I am starting to. And of course, I'm in a situation where now I want to take a look at what my assets are and how I could build them, because I
got a couple of questions for you, Alan. Do you have a financial plan?
No, I do not.
It's time to get one.
Yes, I agree.
Do you have investments right now?
Do I have investments? My investment right now is in myself at the present time.
So you don't have any investments. Do you have RSPs right now?
No, I do not.
Okay. So now that you're out, how old are you?
67.
You're 67. And at what age you want to retire?
That's a good question.
Okay, but no, it is a good question. But but the bottom line is you may not want to.
No, I have to say that the work that I do, I'm a professional photographer, and I am passionate about my work. I don't really see my physical condition. And it's very curious because I was listening to a part of your previously recorded program with Vincent Millardo talking about stress and so forth. And I have noticed, of course, that my stress level has definitely reduced since I was able to basically do away with my debt load.
Well, there's such a thing as good debt and bad debt. Good debt, you borrow money and you buy investments with the borrowed money. The interest rates are low and the investments themselves generally appreciate in value. Bad debt is where you...
interesting. That's a very interesting thing. That is a consideration that I haven't even explored.
Well, bad debt is where you borrow money to buy a car, which depreciates in value faster than the debt gets paid off. The interest rates can be high, and they're usually not deductible.
Well, from past programs and from your description of your experience with your first car, and if you had kept it, and what, how much,
you've heard that one.
How much money you would have at this time, based on all the expenses per year. I totally, I'm with you on that one very, very well. I drive a vintage Mercedes at the present time, and my expenses are I don't have any. I do have some expenses on the car, but I basically have reduced those quite dramatically. And also, I still ride a bicycle a lot too.
Well, that's good for you. That's the health part.
Exactly.
That's what we were talking about in the previous show. We were talking about health and wealth and how they go hand in hand. Riding a bike, as far as your health is concerned, is like paying yourself first as far as your financial plan is concerned. Riding a bike provides you with input, which provides you with good health at the end of the day. So that's a good idea. I have 2 electric cars in the family, and I don't want to do any shows without giving a plug for electric cars because they're not selling enough of them. I have an electric Cadillac. I'm getting 250 miles to the gallon.
Unbelievable.
With no pollution. I got 7,500 miles on the Cadillac since I bought it about 4 months ago, and I've put less than $200 worth of gas in it. I mean, I could not be happier. So, and I'm disappointed that they're not selling more electric cars. The government took away the subsidy that they had, when you bought them. They should be doing this because I believe that we are causing climate change. Okay, and I don't care if I don't save any money on gasoline. I don't give a darn, but I'm not polluting the atmosphere. And we should all be driving electric cars. And I don't have a negative thing to say. My performance is better. I drive the car into the garage and plug it in. Normal plug-in. By the morning, I can go 40 miles on one charge. Generally, that's all I do before I get back home and plug it in again. And my electric bill hasn't gone up very much, a little bit, but not very much. And there's 2 electric cars in the garage. There's a Chevy Volt and a Cadillac. So for anybody out there that's listening to the show, I'm saying, get yourself an electric car. I'm very pleased.
Well, Fred, that's very interesting because I haven't had too much experience, I mean, other than what I've heard about them,
Yeah.
I haven't. Now, I have just one other question. Do you think you're going to be starting any of your workshops again?
Oh, for sure.
Oh, that sounds good.
Yeah, for absolutely sure. But I had to upgrade all my workshops because some of the information was getting boring and stale.
Well, I think that on my part, I think it's definitely time for me to talk to you about some of these potential investing possibilities,
Well, everybody needs this. Everybody really needs 3 things. You need a financial plan. You need the best financial products inside the plan, and you need insurance. Okay, those are all financial needs. You need to make sure you have the right kind of life insurance. You need to make sure that you've protected yourself against critical illness and disability. You need to make sure you have the right kind of travel insurance that pays, that doesn't disallow claims because of pre-existing conditions. You need to cover off on all the what ifs. You sit down and ask yourself, what if? And you make a list of what ifs. Maybe the number 1 on the list is divorce. What if I ended up in a divorce? Are my assets protected? What would my spouse get? Is there some way to protect myself? What if I were to lose my job? What would happen? What happens if I get outsourced or downsized or whatever happens with corporations? What happens if I lose? What happens if I just get fired? Okay? Like Jean Ghomeshi as an example. Okay? These things can happen sometimes. So what happens if I become disabled? What happens if I have a heart attack? I don't die, but I just get a heart attack. And the heart attack causes me to become disabled. 90% of mortgage foreclosures are caused by disability. So how do I protect my assets in the event something happens? Let's call it the unexpected. So something unexpected happens, how am I protected? That should be part of your plan. And I will say one other thing. If everybody bought the right amount of life insurance they need, they wouldn't be able to afford to pay for it. So you got to prioritize your insurance needs. Okay? So you need to have a long conversation with somebody who knows their way around the insurance industry. And I'm not only talking about life insurance and disability, I'm talking about auto insurance, everything. What happens if somebody runs into you and they don't have proper insurance, enough insurance to cover you if you become disabled? I have a client right now who's paralyzed from the neck down in a wheelchair as a result of an auto accident. Okay? These things happen. And he was a champion figure skater before. So think about this, okay? Everything has a beginning and an end. You have a great life, but remember, someday it's going to end. And what happens at the end of the day? So you got to cover off on all those points.
Well, thank you very much, Fred.
Okay, give Frida a call. Make an appointment. Come on in and see me. I'd be really look forward to meeting you.
Please do give that information out for that woman to.
Well, you can give it out again right now if you want to. Give it out.
All right.
Legal Shield.
Legal Shield, and a representative you can call is Judy Ryman at 604-568-3082. That's 604-568-3082. 3082, and she can certainly help you to sign up for legal advice.
And ladies and gentlemen, listeners out there, please don't get the impression that I'm endorsing Judy. I didn't do that. Okay, I'm not saying there's anything wrong with Legal Shield, but I don't know her from Adam. Okay, so check it out. Okay, Alan, I really appreciate your call.
Thank you.
You enjoy the rest of the weekend.
Thank you, and you too.
Take care. Bye for now.
Bye.
Okay, so Alan's line, if you just joined us, ladies and gentlemen, if you just joined us, is now vacant. So there's an opportunity to get on board. And I would look forward to talking to you, because this show, help me, please, because this show is all about conversations. I'm trying to make this show about having a conversation with a financial advisor with clients and potential clients. Okay, so if you don't call, I'm just preaching, and that I don't want to do. I want you to call with your comments. I want you to call with your questions. Surely there is something you can share with me and our listeners. Maybe you did a real good thing. Maybe you want to say you attended my workshops and you think they're great. Whatever it is. Maybe you had a bad experience, like the woman who called in earlier, who ended up with her husband taking off on her, and now she's going to lose half her house, she thinks. Okay? So she's worried. And maybe you're worried about something like that, and maybe you'd like to relieve yourself of that worry. I can't tell you that I have all the answers, but I have a lot of them. And I assert the fact that I see 4 or 5 financial profiles every day. I look at income, I look at expenses, I look at assets, I look at liabilities, I look at whether they have a will or not, I look at whether they have the right kind of insurance, I do insurance quotes, I look at their products that they have inside their financial plan. Are they the best financial products that are out there? I compare their income to their expenses. Sometimes I see a deficit. That is a big red flag. So what happens when you spend more than you earn? I want you to read, this sounds so simple. Simple question. What happens when you spend more than you earn? Let's trace that one. So let's say that you earn $2,000 in a given month and you spend $3,000. You're short $1,000. Where does it come from? How do you cover the $1,000 shortfall? Well, you usually put it on your Visa card, your American Express, or you put it on your credit line at the bank. Or maybe you take it out of your bank account. Maybe you got $500,000 in the bank. But the $500,000 you have in the bank now goes down by $1,000 because you spent more than you earned. And if you do that for a long period of time, the $500,000 you have in the bank is going to disappear. So when it's all gone and you can't sell something to cover the shortfall, you have to borrow. And when you borrow, you got to pay interest. And all of a sudden, your expenses got bigger by the amount of the interest. You got to think of the relationship between your income, your expenses, your assets, and your liabilities. Some people say, well, let's see, I spend $600 a month on groceries, and I pay Visa $600. So what they do, they put all their groceries on the Visa card. So do I count the groceries or do I count the Visa card? Because I'm double counting, and they don't know the difference. So for some people, they get very confused when it comes to balancing their checkbook. They don't know how to do that. And you know, it's not so hard. It's logical. It can be taught, but they should be teaching that in school. Okay? Because your financial success starts by properly managing your income and your expenses. The government doesn't even know how to do that. That's why the Canadian government is some $600 billion in debt. About $40,000 for every man, woman, and child in Canada. And in the States, it's something like almost $18 trillion. About $40,000 for every man, woman, and child in the United States. Because they spend more than they collect in taxes. So how do they fix it? Well, they got to raise taxes. That's politically unpopular. Okay? They have to increase the economy, increase GDP, make the economy grow, so they can get more taxes and things like that without having to increase the percentage that people pay. But the relationship is exactly the same. Doesn't matter whether you're an individual, doesn't matter whether you're a municipality, a province, a country, a state, doesn't matter. We have this issue of taxes, and we all pay more taxes than we should. So I have a little cliche I use. It goes like this: pick your politicians wisely. If you're going to vote for somebody, make sure they understand fiscal responsibility. The term fiscal has to do with your income and your expenses. That's what it means. So once again, if you've just tuned in and you're listening to the show and you wonder who I am, who's that character? I'm certified financial planner Fred Snyder, also a registered financial planner representing Scotia McLeod. I'm here to teach you what you need to know to make more and better and more effective financial decisions, because the quantity and quality of those financial decisions that you proactively make for the rest of your life will determine whether you retire in luxury or you retire in poverty. That's the choice, and it's yours to make. So make a phone call, and we'll be back to take those phone calls after these messages.
Fred Snyder.
I want people to call the show that are genuinely interested in increasing their financial IQ so that they can become financially independent sooner and stay financially independent longer.
Fred Snyder.
You don't have a blueprint. Imagine trying to build a house without a blueprint. And how about having a blueprint for your life? What are your lifestyle goals? You need to think about your family life. What are your goals about your family life? What are your lifestyle goals when it comes to health? What are your lifestyle goals when it comes to finances, mental and spiritual? You have to set goals in all those areas, not just finances.
Fred Snyder.
Often we fail because we put too much emphasis on one area and ignore everything else. We work our butts off and we ruin our health. So life is all about balance. So you need a life plan.
Fred Snyder.
Napoleon Hill says this, wrote the book Think and Grow Rich. Anything that you can vividly imagine, ardently desire, and enthusiastically act upon will inevitably come to pass.
Fred Snyder.
My goal, my mission is to help people enhance their financial IQs by teaching them what they need to know to make better financial decisions.
Fred Snyder. Sunday mornings at 9 on CIL 650. This is CISL Vancouver. Smooth and easy. CIL 650. Welcome back to It's Your Money on CIL 650. If you have a question for Fred, call 604-280-0650. Now, back to Fred.
Okay, we're back. We're live. We're interactive. We're talking about your money, more importantly about your money and how to keep it. I kind of want to do another case study here. Here's a person who's 65. Now, that might be you. Maybe you're 55 or 70 or something, but let's say you're 65 and you want to retire in 5 years when you're 70. And the income that you want in today's dollars is $70,000. You've calculated that between yourself and your spouse, you've got $20,000 in Social Security income, and you don't have a pension plan. You figure that you want to get 100% of 70,000. So that's 70,000. That's the income that you want in the future. You're going to be retired for 30 years. That's your life expectancy. So that means you live 30 years after age 65. Inflation is adjusted at 3%. You've been able to accumulate, and congratulations if you have at 65, $500,000, 500,000. Now, again, I tell you, I talk to 5 people every day. I don't see a lot of people that have accumulated $500,000 at that age. Most people don't. You can't save any money right now, so that's zero. We're going to adjust, or we're going to assume a rate of return of 7%. We're not going to include taxes. We won't worry about taxes right now. And we're going to attach a cone of uncertainty called 1%. So that means instead of getting 7, we might get 6, or instead of getting 7, we might get 8. And I can do all the calculations on that right now and see what happens. So here we go. Now that person, the green line, I don't know how many people can see that out there in radio land right now. So if you've logged on to www.cil650.com, if you put Fred Snyder at the end of that, it'll go straight to my show, and you'll be able to click Watch TV and see me. I was on there, and incidentally, that webpage should be made a little more user-friendly because I found it hard to navigate. So there's a suggestion for the radio station. But www.cl650.com, watch TV, and you can watch this show live. There's the numbers. So that green line there represents the period between now and retirement. That's 5 years. And there's retirement at age 70. Based on the numbers in those variables that we punched in, that particular person will run out of money at age 85. So if they're still alive at age 85, they're broke. The cone of uncertainty, if they get 1% less, they'll run out of money at 84. If they get 1% more, they'll almost be 87 before they run out of money. Now, I can play with those numbers. I can make that cone of uncertainty a spread of 2% each way, or 5%. But you need to sit down with a financial advisor such as myself and get your unique set of numbers. If you don't know what those numbers are, you're going to have a problem, okay? And that can be printed out. So if I go back to my data and I look at the data and I say, well, what would happen if the cone of uncertainty was 2%? I make that 2. And let's say that the rate of return is 8 instead of 7. That's 8 before and after retirement. And I do the calculations on that. Now the money will last until I'm 89. But if I get 2% less, 85, and if I get 2% more, 94. So I got 3 definite lines there, plus the period before retirement. If I want the actual numbers, there's the actual numbers on that table. So if you were to come in and see me, you would receive a financial plan that would have those numbers in the financial plan so that you would know your track or the track that you're running on. And I can sit down and interactively with you at the wheel design a unique set of numbers that's consistent with your particular goals. So I hope you understand what we're talking about here. The plan will only provide income to age 88. You'll need to make some modifications if you live for 30 years, because I designed that to go for 30 years. Okay? It doesn't quite work. Almost works, but not quite. What are some of the things that we can change? I can go back in here and I can say, I can make that 8% 10%. I wonder what will happen if I'm curious myself. I'll make it 10. So what happens if I get 10% instead of 8? What do the numbers look like? I never run out of money. The money lives longer than me. So that means I can leave something to the kids. Okay? Because if I die along the way, it just goes to the kids. If I die when I'm 85, the kids will get an awful lot of money. They get over $500,000. In fact, the number is $1,087,948. I can click anywhere on that line. Over here, at the end of the day, the number is $928,481. I'm 99 now. Okay? At retirement, the number is 805,000. Today, remember, it was 500,000. So I turned 500,000 based on that scenario. That's if I get 10%. And I don't like to use 10% because that's getting pretty aggressive. So I'm not suggesting, ladies and gentlemen and listeners, I'm not suggesting for a single solitary minute that that's a guaranteed rate of return. It isn't. It's an expected rate of return or an assumption, whatever you want to call it. If I get an extra 2% over and above that, the money just runs away with itself. Goes through the sky. And if I get 2% less, it runs out when I'm 93. Can you see what I'm talking about here? Can you visualize yourself knowing what these numbers are? Can you see your financial future when you have these numbers in front of you? When you have a second opinion on your investment portfolio, a ProStation written report, when you have that, you can say, well, the expected rate of return on my portfolio based on the ProStation report is 7.5%. I can put 7.5% in there and say this is what would happen if you get 7.5%. So we can go back, click here, and I make this here 10%, 7.5. And 7.5. Whoops, money runs out in this particular case at age 86. So the money dies before you do, unless you die before you're 86. So you got to match them up. That's why last week and the first show that we did today was a replay, and it's about health and wealth because they go hand in hand. I don't know how long I'm going to live, and you don't know how long you're going to live. So we have to make an assumption. Some people say, well, I'm going to live to be 100. Fine. Most people don't, but you can, that's for sure. And they have medical procedures right now which can extend life a lot. I said in the earlier show that back in 1965, when they launched the Canada Pension Plan, the life expectancy for the average Canadian male was 5 years, age 70. Today it's age 83. So that's how it's changed. They have ways with 3D printers right now where they can actually print body parts. I know a fellow that had a heart valve transplant, a pig's heart valve they put in, and he lived 12 years. And he had to have it done again at the end of that period of time, but he died, but not from heart failure. It was a prostate issue. So we don't know. So you're out there, you're listening to the show. The number to call is area code 604-280-0650. If you're calling long distance, it's 1-877-280-0650. If you want to log on, it's www.CIL650.com. And for those who are shy or reluctant to talk on the air for any reason whatsoever, Frida's down at the office at area code 604-737-3512, long distance 800-661-1495. You might want to make an appointment for a second opinion on your investment portfolio, no cost or obligation. Written financial plan, no cost or obligation. Just give Frida a call. Once again, 604-737-3512, long distance 800-661-1495. Let me remind you once again, we're talking about your money, more importantly about your money and how to keep it. And the key phrase in there is how to keep it. I've often thought many times of changing the name of this show so it's more descriptive. Thought of IQ Money, IQ Wealth. Because really, it's about financial information. And the information itself is not the important ingredient. What is important is that you get the information, that you get the financial plan so that you can decide when and if you want to put it into effect. So once again, so that you can decide, you have the information and you want to push the button and say, okay, let's implement this plan. Or maybe I don't want to implement this plan until next year. I know it'll cost me something if I do that, but the important thing is that you get the information. Let's talk to Mavis from Vancouver. Mavis, welcome to the program.
Yes, good morning, Fred.
Good morning, Mavis. How you doing?
Oh, good, thank you. I was wondering, like having your executor to be from a financial advisor, is a conflict of interest?
Yes.
Well, in what way? How?
Well, the advisor can give you advice that's more suitable for the advisor. That's in the advisor's best interest. That's like putting the fox in charge of the hen house.
Oh,
Okay.
What about an accountant then?
Well, an accountant is fine. If the accountant is an accountant, but not a financial advisor. And I've run into situations where I see situations where a client has their advisor as their executor. I think that's wrong. I wouldn't do it. I've had many clients ask me to do that. I just won't do it. I see it as conflict of interest.
Okay.
So you have an accountant, not bad. Lawyer, probably better.
But a lawyer?
Yeah.
Oh, but then in financial affairs, he won't be able to help me, right?
Pardon me?
In a financial situation, he is not the one who can advise
Well, an accountant is, there are some lawyers that are also accountants.
Oh, I see.
They do both.
Oh, they do both.
Yeah, that would be ideal. Or you could have a relative, but just what you should do is go on my webpage, Mavis,
Mm-hmm.
and if you go there, you can look up the duties of an executor.
Yes.
And look up the duties of an executor and see what an executor has to do. And appointing somebody an executor doesn't mean you're doing them a favor, believe me.
Oh, I know it's a lot of work.
It's a tough job, and if they fail, if they mess up, they can be sued
Mm-hmm.
by the beneficiaries of the estate. Let's say that they look after investments and they make some wrong investment choices, the beneficiaries of the estate can sue them. They're legally liable.
So, is there a lawyer that does that? As you say, also an accounting too. A name?
Yeah. Well, why don't you do this? I don't want to give that name out over the air. Give me a call tomorrow at the office, and I will give you a referral.
Okay. Okay. Thank you.
Any more questions?
That would be about. Oh, you know what about the? Do you need to keep the bank statement and credit card statement for 7 years, or can you throw them away?
Well, I think according to CRA rules, you have to keep documents for 7 years.
The bank statement?
I don't know if CRA requires you to keep bank statements for 7 years, but generally speaking, records that may be required for income tax purposes, which could include a bank statement, need to be kept for 7 years.
Why do they need a bank statement?
I don't know. Why do they do what they do? I don't know.
And what about credit card statement?
Well, it's the same thing. I mean, you may, if you're a business person and you have
no, I'm not a business.
Well,
not a business person.
There's probably nothing that you're claiming that you have to prove. Okay, so if you have interest expenses you're paying on your credit cards, which could be tax deductible for whatever reason, I don't know, but if you did, then you'd have to provide CRA with proof that you actually spent that money. That could be a credit card statement.
Oh, interest expenses.
Yeah, you need to have documentation to support whatever you're claiming as a deduction. That's what you have to keep.
Oh, I see. So if there's no bank deduction and things like that, then
generally, if it's just a straight ordinary return, probably not. No.
Okay.
Just ask yourself the question: is there something associated with this statement that I've claimed as a deduction, like medical expenses, as an example? Okay, they can be deductible. So you need to be in a position that if CRA asks you to provide documentation to prove the expense took place, that you can provide the proof, because the burden of proof is on you, Mavis, not on them. They can allege anything to be true. You have to prove it's not. They don't have to prove anything.
So if you don't have proof, and then you did have expenses, you don't have proof, what's the penalty?
Well, the penalty is the tax you got to pay. They'll reassess you. They'll charge you the tax, and they may charge you interest on the tax that you should have paid. It's not. I mean, they're probably not going to put you in jail.
Yeah, but the taxes is hefty, is it?
It can be in some cases. Let's say you had something that goes back 7 years ago. Be a lot of interest on that.
So
better be safe than sorry. It's probably a good idea to save as much as you can. Get a great big shoebox and label the shoeboxes for January, one for January, one for February, or one great big box named for all last year. Put everything for last year in one big box.
So you have to have it in each year. You have a box. Is that it?
Well, you need to keep the receipts. Maybe. If you're writing them off, you need to keep receipts.
Yeah, but then when we do the income tax thing, the receipt is like you have to. I have it with my income.
Look, if you haven't claimed the deduction relative to an expense to satisfy CRA, you won't need a receipt. If you've claimed the deduction for whatever reason, and you've written off some deduction, and you probably don't have many of those except for maybe medical, then you're going to need the receipt if they ask for it. If you don't have it, they can and probably will disallow it.
But usually I keep it together with my income tax return, the receipt.
Well, you need to be able to find the receipt if they ask for it, wherever you keep it. You don't have to send the receipt in when you file your tax return. You may claim $1,000 that you put on your Visa card to pay a medical bill or something. I don't know what it would be. But if you did that and they ask for the receipt, then you're going to have to provide the receipt. So you're going to have a way to find the receipt. You're going to have to retrieve it somehow. So you got to organize it in such a way that that receipt is retrievable.
Mm. Okay.
I don't think you have much of a problem, Mavis, in this area, because you don't have you're not filing tax deductible expenses, generally speaking. You're not running a business.
Okay, so the business people is
It's not likely that you have anything to worry about.
Okay.
But you got to remember, I'm talking to a lot of other people too right now, and the advice I'm giving you, they're listening to too as well. So just remember that. So I have to be careful that what I say is applicable and is properly framed in terms of the way I say it.
But the thing is that also too, you have to in documentation, right? In paper form.
Well, you have to have documentation, yeah. But you don't need to worry much about that. You just have a straight, ordinary, simple, personal tax return to file. It's not complicated. A business person has to list their gross income and their net income. You don't have any rental properties, do you? Are you renting any property out to anybody?
Well, you know what?
You probably do have, okay? So that's where the receipts come up. So here we go around the block, okay? So if you have rental properties, then you have expenses that you can legitimately claim against those rental properties. If you have a rental property that's got a mortgage on it, the interest expense on the mortgage is tax deductible. You're going to have to prove that claim if it gets challenged. Depreciation, called capital cost allowance, against the house is tax deductible. You're going to have to prove the value of the house because the CCA is a percentage of the value of the house. You might have put a new roof on the house. All those expenses, a portion or all of them, are tax deductible. And you may have to have receipts to prove that, or they'll disallow it.
Mm-hmm.
Maybe it's the best thing to do. Give Frida a call. Come on in and see me. I haven't seen you in a while.
Oh, thank you.
Okay?
Thank you.
You take care. Enjoy the rest of the weekend.
Thank you. Bye-bye.
Bye-bye. So, ladies and gentlemen and listeners, if you just tuned in, I'm certified financial planner Fred Snyder, also registered financial planner representing Scotia McLeod, and my mission is to teach people what they need to know to make better financial decisions. And sometimes those decisions are complicated and sometimes they're not. But my job is to be your financial coach, to guide you, to prepare you with a document called a financial plan, to help you select the best investment products to put inside that plan. Those products may be investment funds, they may be individual securities, they may be GICs, term deposits, they may be bonds, all kinds of fixed income securities. My job is to help you choose the best securities to go into your plan so that in the end, you can get a real rate of return on your money after taxes and inflation. A real rate of return on your money, let's say you get 7%, how much tax do you pay on the 7%? If you could get 7% from interest, and you can't, not that I'm aware of anyway, but if you could get 7% from an interest-bearing investment, you'd lose a good third of the 7% to the tax man. So let's say you're left with 5. Let's say that inflation is 3. You're now left with 2%. Your real rate of return after taxes and inflation is 2%. So if you're getting only 2%, we'll say in a bank account or a GIC or a term deposit, the government is going to take almost half the 2% in taxes. So let's say you're left with 1.25. If inflation is 3, take that off the 1.25, you have a negative return of 1.75%. Think about that for a minute. Are you going broke safely? Are you going south instead of north? Are you going east or west instead of north? Because you want to go north. You need a GPS to help you do that. Let me be your GPS. Let me be your compass. Let me be your guide or your coach to help you achieve financial independence. And believe me, it's important. You may not see it as important today, or maybe you think it's too late for me because I'm too old. First off, you're never too young, and secondly, you're never too old. So wherever you stand financially, it's time to become proactive, not reactive, proactive with how you deal with your money. The way you become proactive is make a phone call, 604-280-0650. That's a live one. 1-877-280-0650. That's a live one. Frida down at the office, you can call her. She's there if you're shy. 604-737-3512. If you're calling long distance, it's 800-661-1495. We're here to help you. Once again, there's no cost, there's no obligation of any kind whatsoever. So give Frida a call, and again, get yourself on track. Get your financial future going today by getting yourself a written financial plan. Again, this show is all about financial education. If you're a teacher, if you're a member of the school board, if you're a school trustee, and you want me to address one of your classes, graduating class on the subject of money, if you belong to a service club or you have a company and you want me to come and speak to your organization about financial planning and about how it fits into your organization, give me a call. You can reach me. My cell phone is 644-7526. Area code 604-644-7526. 644-PLAN is a good way to remember it, okay? Again, you want more information, you can get that information by calling Frida. We have a nice brochure that we send out. It's called The 13 Reasons Why People Fail Financially. Call Frida and you can get a copy of that. So once again, let's deal with the problem. The problem is called lack of knowledge, or lack of information, or better still, lack of education, financially speaking. So we're talking about how you can solve that problem, how you can contribute to the solution rather than being part of it. We need to teach people what they need to know to make better financial decisions. So if you just tune in, I'm certified financial planner Fred Snyder, also registered financial planner representing Scotia McLeod. And again, I dedicate what I do to financial education. You won't be disappointed. Make a phone call. 604-280-0650. Long distance, 877-280-0650. www.CIL650.com. And again, if you want to log on to my webpage, I'll just pull that up here right now. www.fredsnydergroup.com. Log on to my webpage. Again, we had some questions today about being an executor. You can log on there and get all the checklist, what it takes to be an executor. So once again, we're out of time. We have to go. And we'll sign off, and we're here every Sunday between 10 and 11 live, between 9 and 10, which is a replay. And we'll see you same time, same station next week. Bye for now.
If you'd like Fred to review your portfolio, call his office right now at 604-737-3512. That's 604-737-3512.